How you guys doing? Welcome back to the channel. Today I want to talk about a question that gets asked of me a lot is people are like, you know what, Kent, what's the greatest thing about being a financial advisor? And that answer is very easy. I always say it's because I absolutely love acronyms and I just get to crush the use of acronyms every single day, and I just love it because acronyms are so sweet and they shorten things, and it's really exciting stuff. Kidding. Probably a lot of you tuned out already. Uh, so I've just hired a new guy, and I'm in the middle of training him, and he's watching some of my videos, and the other day he watched a video where I walked through an actual sample plan, and he was like, you know, that was great. I didn't realize like you could time things like that. The only issue that I had was that, you know, I didn't always know exactly what all the acronyms were, so I had to go and stop and Google them. And it reminded me that I've always wanted to make this video to list off the most common acronyms used by, you know, your financial advisor or your financial planner. And we always sort of get in the habit of assuming that you know what we're talking about, and that is the problem. And so I find sometimes you might just be like, well, I'm going to nod along, and I have absolutely no idea what you're talking about. So here's a good cheat sheet. I'm going to go through all of the major ones. This isn't going to include some of the crazy ones that are also in like the corporate taxation world. Some of those, when I'm having conversations with like high-end accountants or whatever, I'm like, what the hell are you talking about? What is an MTAR? I'm not really sure, but thanks for bringing it up and making me feel like an idiot. So the first one, obviously, you've heard it a million times, RRSP or RSP. Sometimes it can be shortened. All this is Registered Retirement Savings Plan. This is your primary investment or retirement account in Canada. Put money in. It's called registered, and every registered account is going to allow for tax deferred growth inside there. The investment growth isn't taxed until you pull it out. You're also going to get a tax refund when you put the money in. It's going to reduce your taxes payable. SRRSP is a spousal RSP. You open that up, it will be an account in your wife or husband's name, but you're the one that contributes and gets the initial tax savings, and then when it's pulled out later, it's taxed in their hands. TFSA, the tax-free savings account, probably the best account in Canada. It has a limit right now of $75,500. As long as you were over the age of 18 in 2009, you can invest up to an extra $6,000 per year into the account. Everything that's invested in there grows completely tax-free, and all of that growth can be pulled out whenever you want, completely tax-free. That's why it's called the tax-free savings account. It's incredible. The RIF, RRIF, the Registered Retirement Income Fund. This is what your RRSP turns to in retirement when you start drawing an income out of it. You have to convert your RSP to a RIF at the end of the year when you turn 71. There's minimum amounts you have to pull out of that account. There's also the LIRA or the LRRSP or LRSP, but I'll use LIRA, which is the locked-in retirement account. So basically, if you had a pension, there's going to be a portion that was in your pension that all of a sudden has to transfer into what is called a LIRA, a locked-in retirement account. Basically, the government making you create your own future pension, and it's invested. It's a registered account. Things grow tax deferred. You end up pulling it out when it turns into a LIF. So once you convert your LIRA into a LIF, that's when you start drawing out the pension income. The LIF, or LIF, is the Life Income Fund, or Lifetime Income Fund. So basically that's just your lira converting to a LIF, just like your RSP converts to a RIF. I hope you're still with me. Now there's CPP, the Canada Pension Plan. This is Canada's main pension plan, I guess. This is the one you and your employer contribute to. Generally, people are taking this money at 65, but you can take it at 60, anywhere up to 70. The amount of money you get from CPP is based on how much you've contributed to it. Next is OAS, or Old Age Security. This is another Canadian pension plan that's paid out based on how long you've lived in Canada. If you've lived in Canada for up to 40 years or over, since you were the age of 18, you're going to get full old age security at age 65, but you can choose to delay it until you're 70 and receive more. There's also OAS clawback, which is something that people worry about, so you'll have that pension clawed back if you make too much money. Next one in that list is GIS, or the Guaranteed Income Supplement. So this is available for lower income pensioners in Canada. You're receiving OAS but don't have enough other income, then you're going to receive a top-up that's tax-free, which is the Guaranteed Income Supplement. I've made a number of videos about CPP, OAS, and GIS, and basically everything on this list. Next is, I guess, the RESP, or the Registered Education Savings Plan. This is where you can save for your children's education. It's registered, so the money, the investments inside, grow tax deferred. This is your money going in. The government will give you a CESG, Canada Education Savings Grant, of 20% for every dollar you put into there, up to a maximum. Most people know this. You put in $2,500 in a year, the government's going to give you $500 to go into that account. ETF, that's an exchange traded fund. I mean, it's basically just an algorithm, I guess, the easiest way to put this, of a whole bunch of, companies or bonds or whatever, investments, and the exchange traded fund is using computers to model what's happening on the exchange, and the fund is going to copy that. So this is a big competition, I guess, to mutual funds, to different ways to have diversified investments. The TSX, or the Toronto Stock Exchange, that's where the majority of Canadian companies that are publicly traded are listed on the TSX. A GIF, or GIF, is a Guaranteed Income Fund. This is an insurance-related product, similar to a segregated fund. So it's like a mutual fund, but it's, insurance product, so there are guarantees involved with it. But basically it's invested the same way as a mutual fund. It just has guarantees attached to it, and that costs more money. So don't maybe fall for that guarantee. MER, this is a big one now. What's the MER, or whatever? MER is the management expense ratio. That's how much a mutual fund costs to manage. And so generally speaking, even though this is kind of questionable and shady now, all of the fees associated with a mutual fund are inside of the MER. So the MER of a mutual fund might be 2%. That means if you own that mutual fund, you're paying 2% to own it, because that's the MER. There's also something called a TER, or trading expense ratio. You'll see it a little bit lower down on the fund facts, and that's how much the trading expenses are for that particular fund. Now we're getting a little bit into insurance for a second. We got CI, that's critical illness insurance. Critical illness insurance just pays a one-time lump sum if you're diagnosed with a critical illness and generally survive for 30 days. It'll pay out a lump sum. Then there's DI, or disability insurance. That's where it's going to pay out a monthly amount for up to a set term if you become disabled and can't work. DBPP, Defined Benefit Pension Plan, and then next is DCPP, Defined Contribution Pension Plan. And it's easier for me to just explain these two together. So you know that you have a defined benefit pension plan if it says when you retire you are going to get paid this much money per month, which is generally like a percentage of your salary or best 5 years or whatever. Then that means you have a defined benefit. And defined contribution pension plan, which is more common these days because companies don't really like the liability of the defined benefit pension plan anymore, just means that there's a set contribution, and then the money that you and your employer are investing into that pension plan is invested in a defined contribution pension plan, and you'll see it go up and down, and it's not going to guarantee to pay you out anything for life, but it could work out better if the investments perform better. MTR is marginal tax rate, so that's the tax bracket that the last dollar that you earned falls into, which isn't your average tax rate, so you do not owe the same amount of tax on every dollar. That's just the amount of tax you owe on the last dollar, so the highest tax bracket you fall into. RPP, Registered Pension Plan, which is just a defined contribution or defined benefit pension plan. DPSP, or Defined Profit Sharing Plan. Some companies are going to offer that. It's basically just like a stock option plan or something like that. We're like, okay, we're going to define some sort of sharing plan in the company where you can buy shares or something in the company. Where are we now? ACB, which is Adjusted Cost Base. So basically when you buy a security, or maybe you buy a piece of real estate or whatever it is, when you initially buy it, it's going to have an adjusted cost base. And that might go up and down depending on expenses and other things. And then when you sell something, and let's say that you sell a property at a gain, then you're going to sell it, and then you're going to minus off the adjusted cost base and say there's your profit. Now you owe a capital gain on the profit. So the adjusted cost base is important to track and know for different things. It'll be on statements. You'll know if you bought a property how much it costs to buy, but if you put some money into a rental or cottage or whatever, then you want to keep track of that, because then your adjusted cost base can go up and you can actually pay less tax when you sell it if you're good at bookkeeping. AUM, you'll hear this a lot in the financial industry. That's assets under management. So if you're like, what's that company's AUM, and like, or AUM of a fund, and like some mutual funds will be like, the assets under management of this fund are $10 billion, and you're like, holy crap, that's pretty crazy. CFP, that's a Certified Financial Planner. Basically just what you should probably be looking for in a financial advisor. Doesn't mean that they're going to for sure be better, but it means that you've got some years of experience, you've passed some tests, you've gone through a whole bunch of things to understand the complexities of developing a full and comprehensive financial plan. CPI, or the Consumer Price Index, this is what they use to track inflation. So generally speaking, it's been fairly low for the last 10-15 years, but the CPI in 2021 is pretty high. It looks like inflation is going kind of through the roof right now, which is a little bit scary. You're hearing a lot about these lately. You'll hear IPO, which is an initial public offering. So when Facebook here is a good example. You're like, okay, Facebook, it's a private company. Mark Zuckerberg is making it. He's getting all of these things. Eventually, he's going to want to go public with this company and start trading on the stock market. But before that happens, they're going to put out an IPO. And this is basically like an invitation for select investors to actually put some money into it and sort of test out what the market price is going to be. So there's your initial public offering to take a company public. KYC, it's important in financial planning, or if you're an investment manager, KYC is know your client. It means you need to know the risk tolerance, you need to know the time horizon, you need to know all of these things about your client so that you're giving them proper advice about how to invest. So I don't actually invest money for anyone anymore. So I don't really do KYCs, but it is important for me to know sort of what the KYC is going to be. What's your birthday? What are your goals? What are your concerns? Other things, and I can help you figure out what that is. And then when you invest, you'll know why. A REIT, or REIT, is a real estate investment trust. This is basically like a mutual fund that just invests in real estate. So it might buy commercial buildings or, residential condos or something, and it's going to earn passive income through rental and lease payments. Is also going to grow because the real estate investments are going to grow. So that's a good way to invest in real estate if you don't have enough money to purchase your own real estate property or don't want to be an actual landlord. CDIC, the Canadian Deposit Insurance Corp. I just thought I'd throw this one in there. Not that you hear about this all that often, but the CDIC is the agency that is going to protect your investment accounts just in case the financial institution that you've invested at actually goes belly up. Then savings accounts and things like that at banks are insured for about $100,000, where investment accounts are covered by the CDIC of up to $1 million. Talked about the CESG already. A few more. HBP, which is the Home Buyers Plan. This is allowing people to take money out of their RSP tax-free the first time that they purchase a home. So that's the Home Buyers Plan. There's a bunch of rules for that. I think I've got an updated video on that somewhere. Maybe I haven't done it since they changed the rules. Another one is the LLP, which is the Lifelong Learning Plan, which is the same thing as the Home Buyers Plan, except it says you can take some money out of your RSP tax-free if you want to go back to full-time school to get an education. You can take money out for a couple of years. And lastly, I have on here LTD, or long-term disability. You'll see this in your group plans a lot of times where it'll say, what's the LTD? Hopefully it says it's paying, 66% till you're like 65 or up to 5 years. Otherwise, there's potential that you aren't properly insured for a disability, and so you might want to look at coverage there. I'm not sure if I covered them all. I tried to go through a list. I tried to think about them all. I hope you guys learned something. If you did, please subscribe. Please comment if you liked it and you got something nice to say. And we love to hear from you. Thanks again for watching, and hope everyone's doing well. Chat soon.